Is it too hot or not? That's the CPI report this morning, and what it means for the markets, that's coming up on 3 Minutes on Markets and Money. This morning, the much anticipated CPI report out at 7:30. That number is going to be driving markets today. Yesterday, markets rallied about 1.5%, getting just slightly above the 20-day moving average, but holding this really firm support line at the 100-day moving average. And we've just been trading sideways now really for about the last month, have really not gone much of anywhere. So the good news is that we did work off some of that overbought condition on a short-term basis. So again, a bit of a market rally back here towards 4,000, towards that 200-day moving average. That could be very possible this morning if we get a softer than expected CPI report. Again, big advance yesterday. Estimates right now are for about a 7.3% print on CPI. So again, any number less than 7.3 on a year-over-year basis, that's going to lead to a fairly big pop in the markets. Goldman Sachs expecting that we could see as much as a 3% jump or more in the index if that number comes in substantially weaker than expected. That's not unprecedented, of course. If we go back to just where we were in November when we got the October CPI report, market was up 5.5% that day, and 3.1% on the Brookings Institution speech from Jerome Powell just 2 weeks ago. So again, these big moves in the markets, not uncommon, particularly in a market where we have very little liquidity like we have currently. So again, watching this day, any number stronger than 7.3% or hotter coming in. Now remember, just last week, PPI, the Producer Price Index, came in hotter than expected. So if CPI prints at a higher number than what is currently expected, which is currently a 0.3% rise in the core index. That's the same as last month, by the way. Any number hotter than that is going to lead to a decline in the markets. Again, that's going to probably wipe out most of yesterday's gains, if not take us down below the 100-day moving average. So the range of options for this CPI report this morning is kind of all over the board, but you've got upside to around 4,100, which is where this previous peak was in the markets after the Jerome Powell Brookings Institution speech, or we've got a potential decline to 3,840, which is where the 50-day moving average is. So again, there's risk of this market going in any direction based on this number this morning. But also take into account that if today the CPI number is a little bit weaker here, that's going to cause the market to rise, which is not going to be welcomed by the Federal Reserve, who has their policy announcement tomorrow where they will hike 50 basis points. A strong move in the market today will almost ensure a much more hawkish statement from the Fed tomorrow. So whatever gains we get today could actually quite easily be reversed again tomorrow. So buckle up for more volatility over the next couple of days in particular. And as we move into Friday, that is a $3.2 trillion options expiration day. So again, volatility this week, light trading, this is all going to be a really kind of a bumpy ride. So just be prepared. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.